What's up, my legacy lovers? Welcome back to another episode of the Do.Different.Better Show, where we turn wealth wisdom into everyday money moves. I'm your host, Elaine Rasmussen, CEO of Social Impact Now, founder of Connective Institute, and managing director of the Integrated Capital Fund. And today, I have a guest I know you are going to find as interesting as I do. Today, my guest on the show is John Makarewicz. He is a managing partner at Faris Capital Partners, where he applies over 2 decades of business leadership and real estate investing experience to help clients achieve robust and sustainable returns. He's a devoted husband and father of 3. John combines disciplines he's honed from running marathons and hiking trails in North Georgia with his passion for delivering an exceptional client experience. With a track record of scaling a business to a 9-figure private equity exit and now leveraging those skills into private equity acquisitions, John brings an approachable, down-to-earth style that resonates with investors, partners, and podcast audience alike. Today is a must listen if you've ever thought about building a private equity investment or portfolio. I'd love for you to join me in welcoming John. Thank you for being on the show today.
Oh, my pleasure. So excited to be here. Looking forward to diving in.
Yeah, so I'm going to ask you the same question I asked all my guests. What is your first memory of money?
Yeah. A desire for it, I guess, at a very young age, right? I guess, like a lot of entrepreneurs and leaders, there's sort of that idea. If you look back into like maybe say elementary or middle school, they were hustling, doing, cutting lawns for neighbors or babysitting or looking just for opportunities to make money. And so, I was very fortunate in a sense. My parents, came out of a very blue collar, my dad actually grew up in poverty. And so, this was sort of in the Vietnam era. So he joined the Navy. After coming out of the Navy through the GI Bill, got his college education, but retired as the CEO of a Fortune 500 company. So I got to watch that journey occur. But because I think of his upbringing, or really in a sense, lack thereof, he was kind of on his own, always very conservative with money. So I'm very thankful for that because I never felt rich, even as he was climbing the corporate ladder. I never felt wanting either, right? It was like this good balance of, we're secure, we're safe, but we're not, just going to go buy the biggest house and the newest cars and all that stuff, right? And so that is something that I really didn't appreciate maybe until later in life. I didn't dislike it, but I realized that I have that baked into my psyche as well. So, that idea, going back to the original question, right? I was mowing grass, I was, weeding, anything I could do to make a few extra dollars. And as I got into my 20s, it really occurred to me that desire was less about the material things I could purchase. It was more just about freedom, right? And control. I didn't like having to go to my parents and asking for money to go see a movie. Like, I just wanted to be able to have that money and ride my bike down to the movie theater and go see a movie with my friends if I, with permission, of course. But
right.
That thing of just that idea of control of my life, I think is really what it boils down to. And I didn't really know it at the time, but once again, in my 20s, it really kind of clicked with me that was what I was after. Did I lose you there for a second?
No, I think we're here. No, we're still here.
Yep. Sorry about that. But yeah, as I, got into sales in my early 20s and backing up just a little bit, one of the things that I've learned about myself as I've gotten older and, I have the ability through, maybe an element of charm and talking and sales to kind of talk my way out of things. And so in high school, I was like an A and B student, but I could get a C occasionally and talk my way into a retest. So when I got to college, it was actually a bit of a rude awakening. And, candidly, I did not finish. I intended to, but I came home after a few years at Florida State because I really felt like I was wasting my parents' money. I was just not performing. And because they had the ability to pay for my college, it was really weighing on me. And so I came home. I was going to a local community college and working. And then I met the love of my life and we ended up getting married pretty young. And, once again, that intention was always there. But I said, you know what, I'm going to start making some money. So I'm going to go sell real estate. And then I'm going to do that until I figure out what I really want to do. And then 20 years later, we're exiting a company I helped build in residential real estate. So, kind of blink and, that whole idea of going back to college was way in my rearview mirror. And so I guess in a sense, it was the school of hard knocks, right? And I've learned that look, I'm not anti-college at all. I have a 21-year-old. He's getting his degree at University of Georgia. My daughter's planning to go to college as a junior. I've also got a 10-year-old. But, I'm very thoughtful when we talk about the intention behind college, because if your goal is just to become an entrepreneur or to get into sales, like maybe there's another path you can take, or use college to, maybe learn some skills about, socialization and meeting different people and critical thinking. But, my kids are all, sort of pursuing very, strategic degrees. My son is doing electrical engineering, right? And so that makes sense, right? But
smart.
I feel like this library of books behind me is my college, right? And so, that's how I've learned and grown and improved over my life. And then working with, mentors, right? Aligning myself with people that are better than me, that have accomplished what I'd like to accomplish, and trying to learn as much as I can from them.
And I love that. And I say the same. Sometimes I think people don't know that college isn't for them until they get to college. And because we have this stigma, and we've been on this track, I would say since like the 80s, of everybody go to college. I've been a big proponent of like, no, not only does not everybody go to college, we don't need everybody to go to college. We actually need, and right now we're experiencing the result of that. We're short on electricians, we're short on pipe fitters, we're short on plumbers. I told my son, I said, listen, please become an electrician. I'm like, become a plumber. I said, we need one. And two, I got tired of spending $375 every time somebody came to my house. I said, please become a plumber. I said, you will be able to write your own ticket. If you want to work 6 months out of the year, you're going to be able to. We're going to need plumbers. But I think sometimes, and I remember even in college for me, my college roommate, she was going to school for electrical engineering, but she wasn't going to class. And her family was a little more well off than my family. And I would say to her, I'd be like, Trish, listen, you don't want to be here. So maybe it's just not the right time. She's like, no, I really do want to be an electrical engineer. I said, no, you don't, because if you did, you'd be going to class. I said, maybe you need time off, or maybe it's not what you want. Maybe you want something that's adjacent to that, or you want something that uses the same skills, but you're taking up space from somebody who actually wants to be here and is actually going to take advantage of the opportunity. And if you haven't figured that out yet, but I think sometimes parents, they're so married to the idea of their kid going to college. I know my son took a really untraditional route. He went to the military. And I was like, I like really wanted him to go to college, because I also went an untraditional route as far as going to college. And I didn't finish till I was like 27, 28 years old. And I just didn't want that for him. But he's actually in nursing school now. And I'm like, again, great profession. I was like, you're going to be able to have a job no matter where you go, no matter where you are in the world. But let's bring it back to you. Enough about me. You're my guest. At any point in time, particularly as being a new husband, what were there any financial sort of challenges that you faced, or you're like, if I could look back, if I know then what I know now, I would have done this differently or that differently?
It's interesting. I don't have that in me. I don't really ponder or hang up on regret, because everything that I've done in the past has led me to where I am today. And, there's not one aspect or element of my life that I would change, where I sit right now. 3 awesome kids, wonderful wife. We've been married, just over 21 years, and we're still like best friends. And so, all those little things that happen along the way, those bumps in the road, or those, missed opportunities, like I have this view of like, well, but it got me to where I am today. And that pain was a lesson learned, right. And so, once again, if I had any regret, it felt like, I wasted some of my parents' money. I mean, that would be the one regret I felt, but it wasn't like a regret back to me. It was more like I felt bad about that, not so much about what happened to me in that situation. And look, I can't remember what president it was, but, I think it was maybe Eisenhower or somebody, but said the world is run by C students. And, that idea that we question things, we don't always just march in the line and follow orders. Like, we're like, well, why is it that way? Or what's this about? Right. And so once again, not in any way disparaging higher education or education in general, but, particularly if you look at like elementary, middle, and high school, a lot of it is about compliance, go to this room at this time, salute the flag, and, just kind of be a good citizen. And that's all great stuff. And I'm not even trying to mock that, but there is an element of the system that is designed to teach you to move papers around and just just kind of follow orders. And so I'm always one that's like, but why is that role exist, or why is it that way? And I think that's what's led to a lot of my ability to lead and grow companies, because I don't just keep doing the status quo. It's like, but why? Is there a better way, or could we eliminate some steps, or could we approach this from a different view? And I would say, once again, from an education standpoint, I read 30, 40, sometimes 50 books a year. So, my brain is flooded with information. And, maybe it's that idea sometimes education is wasted on the youth, right? As they say.
Right.
But yeah. So no regrets, really. There are times I look back on and think about and go, once again, that was a misstep, but this is the lesson I learned from it and how I'm going to make sure that it doesn't happen again. Right. And so I do think about those things. For example, when I was first kind of getting promoted within the residential real estate company, and this was with my business partner that we scaled and grew that company with. But before I had equity in the business, he was kind of assigning additional tasks and duties. And, at one point I was still selling real estate, but managing the buyer team. But when he flipped me over to where I was just fully in leadership, the first year or so, we actually had a moment where he was about to fire me, and we sat down for about an hour. I mean, he actually did fire me, to be very candid. And so we sat down and I said, look, here's my perspective on things. And, just know that I'm hearing you and I'm understanding what you're saying and where I made some misses, but here's some tools that I didn't know that I needed. Right. And so through that conversation, he recognized that, I'd kind of given you the job and then just, left you to your own devices. And what it really boiled down to at the end of the day is I wasn't inspecting what I expected. So to have hey, this is what we want to accomplish. This is what we need to do. But that idea of following up behind to ensure that the thing happened and that the process was moving down the path, and that the checkpoints and sort of the the timelines were being met and hit, I was missing. And it really came down to one department that was overwhelmed. And I was going by every day and asking that leader, hey, do you need help? No, I got it.
Yeah.
And that lesson was learned there as well, that everybody has different behavior. If you ask me a question, do I need help? I'm going to say, yeah, I actually do. Where some people don't want to do that because they see it as weakness. And so versus saying, do you need help? Saying, hey, I've noticed we're a little bit behind here. Send me some files and I'll underwrite them, or send me some files and I'll do this or whatever. And so long story short, that was actually a moment that I look back on fondly, because it did sort of change, my entire leadership approach, my entire management approach. So, those things happen right in life. And it goes back to, I could have been mad. I could have said, what, you didn't do this and this, and I'm out of here, but I said, look, let's talk through this, and how can we come out of it? And so the end of the conversation was, I'm going to give you 2 weeks to kind of get things back where they need to be. And I stayed, till midnight a couple nights in a row. We got caught up. I built out some systems. We kept, meeting regularly throughout that 2 weeks. And at the end of it, our relationship was frankly stronger and the trust was higher. Right. And so
I love that.
Yeah. So those moments, I think about, but it goes back to, it's like, wow, that was actually not a bad thing at all. It actually,
it was a teaching moment. Yeah, and I love that. And I love that because, I'm like you, I'm like, no, like everything that's happened to me has led me to this point. And I'm like very happy with this point in time. And I wouldn't be where I am without those things. So I think that's a rare perspective. So I so appreciate that. But also the whole thing of like, yeah, everything is a stepping stone to the next thing. And it's like, how can I take that experience that maybe didn't feel very good, wasn't a great interaction. And my thing is, how do I make sure that doesn't happen again? Like, I don't want to repeat. I don't want another experience that. Well, in the last couple of minutes that we have in this segment, you talked about you've scaled a business to a 9-figure company where private equity exit, which is really rare air. Yeah. Looking back, what do you see were some of the key decisions or even missteps that shaped how you led and how you were able to make that exit?
Yeah, that's a great question. I would say in terms of lessons learned, the first and really the most important is when we got really clear at the company, it was all about the team and putting the right people in the right seats, right? That was the revelation. And it sounds so simple when I say it, but we made the mistake a lot of companies make, especially in sales, where they take their top performing salesperson, promote them to management and expect it to all work out. Right. And so, another thing we learned is that although we were a residential real estate company, because we handled all of the marketing. So in other words, our agents weren't out prospecting for business. Now they might call their friends and family and sphere of influence. And we actually, incentivize that with the commission splits. but the majority of the business was coming through the company's marketing efforts and our inside sales team that would get those leads booked into appointments for our agents. So it was really like a service, kind of role in a sense, like here's your appointment, go out, earn the business. And so with that, we realized that, what we needed was actually not necessarily somebody from the residential real estate world. So for example, maybe somebody who had a lot of success managing, let's say a Remax or Keller Williams office, not to say they couldn't do it, but it wasn't the natural fit because our business model was more corporate sales, where traditional brokerages were more about, agent headcount, recruiting agents. And so we started going into other industries. New home construction was an obvious one, but shoot, we had somebody from Delta, we had people from Verizon and all kinds of different corporate sales backgrounds. And with that, that's where we really saw the lift. And then making sure that you have the strong culture behind it, right? To support, to take care of, leading alongside, not just barking orders from the main office or whatever. And so I think those two things combined, the getting the right people and then just a relentless focus on culture. And I know we're going to get to that kind of in later segments, that cultural component. But those are the big things. In terms of missteps, it's interesting because when I look back on, say, the Great Recession or even the pandemic, those were actually some of our biggest periods of growth. So I would say there were certainly missteps, to be very clear. I think one of the biggest examples is when we first expanded beyond Atlanta, we underestimated the amount of support those agents would need. They had the same training, all the same stuff, but they just felt like they were over here on an island. And so we learned pretty quickly. And, the first couple of markets we launched bumped along and we were losing cash for about a year, and then they kind of flipped. But that first year was pretty rocky. We had a lot of turnover. And so we learned a lot there. So what we learned in that context is that we needed to figure out whether through, remote or just people being in the office from the corporate, headquarters on a regular basis, just to kind of support, be there alongside them, bring in opportunities for team members from Atlanta to go visit those offices, talk through their successes. So, over time, we created like a really robust expansion checklist where it's like these things all have to happen to kind of create that culture in that new office. So I would say be one misstep. But yeah, one of the things about my business partner at that time is, he was just relentless and just, would not accept like losing as an option. Right. And so it's just that relentless focus every single day to improve whatever's going on. And so Darren Hardy's The Compound Effect is a book that, I still talk about at my current company. We talk about all the time. It's not about massive change overnight. It's about small incremental growth on a daily basis. So
I love that. I'm going to share that with my team. We were literally just talking about that yesterday. I've got some new team members and I was trying to, I think, particularly in this world of high anxiety and high social media, they're wanting things to stay the same. And I'm like, we can't stay the same. Like we've got to be like 1% better every single day, which has a compounded effect. And so that requires us, yes, what you learned yesterday on how to do this process might change tomorrow because we're trying to make the process more efficient and more effective, which actually makes you more efficient and more effective, which is where you're going to get your self-esteem from. So I love that. Well, let's bring this segment home. So you are listening to my guest, John Makarewicz, who is the managing partner at Faris Capital Partners. Coming up next, we're going to really be diving deeper into culture and leadership and what does that mean, but we're also going to be talking about what is a private equity office and how you can maybe start a career doing that. Don't go anywhere. You're listening to the Do.Different.Better Show. I'm your host, Elaine Rasmussen, and I will see you after the break. Welcome back, my bodacious legacy builders. You are listening to the Do.Different.Better Show. I'm your host, Elaine Rasmussen. And with me today is my very special guest, John Makarewicz, who is the managing partner at Faris Capital Partners. Welcome back to the show, John.
Yeah, good to be here.
Nice. So we talked about in the first segment, really talked about your background and your journey and your money story and getting building this incredible company and having a 9-figure exit. But now let's go a little bit deeper. We talked a little bit about before the break, really around your culture and how you've implemented that across companies. You describe yourself as being inspired by John Wooden's leadership philosophy. Like, how does servant leadership actually show up in a day-to-day, both in business and at home as a husband and a father?
Yeah, no doubt. So, I think it's one of those terms that you're hearing a lot more of. I mean, really over the last 10 to 15 years. And I think sometimes there's a misconception around it. Somebody might think it's a little too kumbaya, or like we're all just like loving on each other and, oh, it's okay, you missed that number there. What it really boils down to for me is that there should be nothing that, I ask somebody on the team to do that I myself am not willing to do. Right. And so that idea of coming alongside versus pushing from behind, or leading out front, and even that I don't love, because I don't want it to be like some cult of personality around the leader, right? Where, well, gosh, we got to check with Mark or John before we make any sort of a decision, right? So for me, it's about finding the right people, creating the systems and processes, and providing the tools necessary for success on the job, making very clear what the expectations of the role are. So for example, when we hire somebody, they have like a 5-page document that has their role specific mission, the attributes, the skills, the task, right? The SMART goals, the first 90 days, and like, what does long-term success look like in this role? And then the metrics we're going to hold them accountable to. And so then we craft a 90-day plan. So that first 90 days, week one is a lot of onboarding. And by the way, man, so many companies, take a good hire and ruin it by having a bad onboarding experience. That whole idea, they show up on day one, it's like, here's your phone, and it might not even be turned on yet. Your computer will come in a couple of days, and here's your manual, get to work kind of thing. And so we send out a love bomb, we call it, where it's, some polos, some t-shirts. We give them some Yeti mugs with our trademark full out on it. So it's not even like heavily branded, but just a couple books, and, just try to make them feel super welcome on that first day. We have a morning huddle every day. So that huddle is always about that new team member, where we all just do a little bit of an icebreaker, get to know each other. And so, that's a big part of it. But once that person's in the role, then my job is largely to get out of their way and let them do the job, while being there should they have a challenge or something that comes up. Now, I say that, but we try to teach people, right? Like, don't come to me without a couple potential solutions. I'm not here just to fix your problems, but I'm here to talk through your problems and to listen, and to maybe say, you know what, based on what you share with me, I think the second option might be the best approach. Or maybe here's like a second option with like a little bit of a twist, right? Just because something comes to mind for me. So yeah, that's what servant leadership's about. It's about, really minding the small details, but, giving the employee, or giving the person all the tools they need to be successful, hiring somebody with the requisite skills to do the role, and then let them do the job. That's what it really comes down to for me, because ultimately, if I or Mark Faris, my business partner, have to be involved in every decision making, our growth is going to stall, or certainly slow down dramatically.
Exactly. I call that the Nordstrom effect, because when I worked at Nordstrom as a young person, and I was young. When I say young, I was like 22, 23. And they're like, don't call a manager, solve the problem. And I was like, I like, what? Like, I can solve the problem. And I've tried to implement that in my leadership, and I love you've probably heard this, or maybe implement this, of like, give them a dollar range. You have up to $200 to solve a problem. Right.
That's right.
And I've tried to tell my team, like, I will never, if you solve a problem, even if you solve the problem incorrectly, I will never be upset at that. What I will be upset is if you don't solve the problem, or to your point, you only come to me with problems and you don't come to me with solutions. I literally just had this conversation yesterday with my team. I'm like, listen, why are you just forwarding me an email without telling me like what you want? What do you want to do? I'm doing other things, right?
Yeah, that's right.
I love that. I love that. So let's now get into even like your journey into finance, right? So you say you didn't finish college, and then you went into real estate investing, built this great company. That's still a little bit of a leap from getting into private equity investing.
Yeah.
What was that leap like? And like, what happened? And, walk us through kind of like how you made that twist.
Yeah. So I would say that, this is sort of going back years and years, but I learned early on that relationships are so important, right? And you never know, what relationship might lead to a future opportunity. And that could be a good example is we had this vendor who was selling television advertising. in the Atlanta area. And he followed up with us for 4 or 5 years. We weren't even doing radio advertising at that time, but he was just so good at sales. We would always take the call and take the meeting. He would provide us with market reports and all sorts of intelligence and just, added a lot of value. And so, all of a sudden, a few years later, we're on radio and we're like, no, let's crack into television. And we called him up and he just hooked us up, took great care of us throughout the whole process. And so that's a small example, but how it ended up happening is actually my current business partner had a very similar business to the one I was running in the States, Mark Spain Real Estate. He was up in Canada with a very similarly structured company. And so one day I show up at my office and there's this massive gift basket with all these Canadian delicacies and treats like maple syrup and books. And I was like, who sent me this? And I see this nice handwritten note and he just said, hey, my name's Mark Faris. I'm up in Canada and we run similar businesses, thought we should connect. So how could I not call the person after they send such a thoughtful gift? And before you knew it, we were actually meeting on a monthly, sometimes quarterly basis, depending on how busy we got, just, talking, masterminding, sharing best practices. Because we would never compete on different sides of the border, it allowed me to have something I didn't have before because Mark Spain Real Estate was expanding. So if I called somebody I knew in Nashville, before you know it, I might be in their market and I've just given them intelligence on how we run our business. So what ended up happening is when the company sold, there was this 2-year and then, we came to this mutual decision. It was time for me to move on. And I literally just had a call scheduled with Mark Faris on our regular cadence. And so I said, hey, just wanted to share some news. I've been thinking about this for a while and I've decided to make a change. And he actually just pitched the idea. And, it was kind of interesting because I had planned to take like the year off because, I had a generous severance and, I'd been running this 15-year marathon. It felt like building and scaling this business. But I was so intrigued because what we were wanting to do was not all that different from what I was doing before. In other words, we wanted to basically create a better way for investors to invest. Because as investors ourselves, we had some poor experience with like lack of communication, no communication. Granted, if you're, investing just in the stock market, you can watch the stock price and you can kind of look at your, portfolio. But when you do private investments and you don't get an update for a year, you're like, what's happening? Like,
what's happening?
Apartments leasing up? Like, what is going on here? And so he kind of talked about that first and foremost. It was going to be all about the experience. And so he has this visionary kind of mindset where he can kind of think like 10, 15 years out. And I have an element of that, but I'm really good at the systemization, operations, problem solving, and, hiring the right team. So, it took about a month and a half of us sort of really talking. We went to a conference together, learned more. And I just saw a big opportunity where, even going past the investor, right? What I really learned is that at the end of the day, private equity, in its simplest form, right, is, a company that exists, raises capital from private investors, whether institutional or high net worth individuals, and they acquire companies with the goal of improving the bottom line, right? Simple as that. And so when I realized that what we would be doing, buying an apartment building is no different from buying, a retail store or, any business at the end of the day. So it's like, how do we make the improvements to the operations? How do we drive additional net operating income? And for those listening that don't know, commercial real estate tends to trade on a multiple of the net operating income. So if we can improve the units in such a way where we can command additional rent, if we can add more features and benefits to the property, such that a current resident would be willing to pay a little bit more because the pool's so much nicer. We've added a gym, we added some sports courts and things like that. Then we drive that NOI. And so the clarity really came in my decision to join up with Mark when we realized that it's the resident that's the customer, right? So we just buy these buildings, we take great care of the residents. And I think about it like Costco, right? Hire really great people, take really great care of the customers, because those people, you hire the right people, they'll take great care of the customer. And then the customer, in effect, takes care of the investor or the shareholder. So that's how we think about it. So, we have communication guarantees for our investors. If we miss an update, we owe you a nice night out, a nice dinner, and people always laugh when I say it. But the interesting thing is if we miss one investor update, that's like a $10,000 miss. So you better believe we're going to get those out on the 30th of every month. Right. And, quarterly check-in calls. So we do a lot there, but on the resident side, it's all about their experience. So the metric I follow mostly at Mark Spain Real Estate and even here today at Faris Capital is client surveys, right? So are our clients happy? That's what juices me up more than anything, because at the end of the day, if that happens, everything else will take care of itself. So, it was kind of an interesting path because not something I'd really anticipated or thought too much about. But, I had a 5-year relationship with my now business partner through that masterminding. So I had a really sense of his morals, his ethics, particularly as it related to how he runs a business. And that really aligned with mine. And so that was really what got me excited more so than anything. And then also this realization that as Mark Spain Real Estate grew, it was really in hindsight, I realized the last year I wasn't really happy. And it was because it just changed. It wasn't growing and scaling and problem solving and building. It was kind of like maintaining and improving for sure. But I really realized that I like the building side of it. I like the stress that comes with new challenges and solving those problems and the feeling you get when, that stress becomes excitement because, wow, we solved that, we fixed that. And now we're, moving down the path. So that was also super attractive to me to get back into a kind of a startup phase, and build something fresh and new. So yeah, that was my journey into private equity.
And so we're going to get into this next segment. We're going to go wrap up this segment, but I want you to start thinking about, I want to talk to you about, so like, how are you sourcing folks? Because, I know that there's a lot of capital entrepreneurs out here. They're really trying to push the envelope as far as private equity and what kinds of businesses are getting into. So I want you to start thinking about during the break of like, how are you finding people? How do you cultivate those relationships? Because I want to make the tie like, there's a there even just for businesses. And I think you talked about relationships, and I'm a big person about that. And we're going to get more into that and when we come back from the break. So for all my listeners, you're listening to the Do Different Better Show. I'm your host, Elaine Rasmussen. We are speaking to my guest, John Makarewicz, who is the managing partner of Faris Capital Partners. And when we come back, we're going to get more into like the nitty gritty and like, how do you get into this? How should you be thinking about this? How can you identify opportunities to be an investor? But also, if you're thinking about starting a private equity fund, what might you need to think about? What are the ingredients for you to get started in creating your own private equity fund where you can bring in investors that are going to grow your business? So I will see you after the break. Welcome back, listeners. You are listening to the Do Different Better Show. I'm your host, Elaine Rasmussen. And today we are sliding into the third segment with our very special guest here, John Makarewicz, managing partner of Faris Capital Partners. So now we're going to be really talking more in the nitty gritty of like private equity. John did a great job of telling us what actually is a private equity fund. So now let's talk a little bit about, I want to take two sides of this. So one, I want to talk about a business who wants to look for investments from private equity. What are maybe some of the things that they should be thinking about? And then I want to talk about if somebody wants to start their own private equity firm, what might be some of the things that they need to think about. But let's talk about, hey, I'm a business. What should I be thinking about? How do I find a private equity firm? What should I be prepared to talk about or prepared to do if I'm looking for a private equity investment?
Yeah. So, I think at the end of the day, what private equity is looking for is a business that has some form of an edge, something that makes them unique or different within the marketplace. So, using my example, residential real estate is kind of almost commoditized in a sense. I mean, there's like, and I haven't looked recently, but, depending on, kind of the market cycle, there could be like 1.7 to like 1.4 million real estate agents in the United States at any time. So like 1 in 3 or 1 in 300 Americans, right? And so, with that, it just goes back to like, how do you stand out differently? And so our model, where I mentioned earlier, we handled all the marketing, we warmed those leads up into appointments. So the agent was effectively focused on client experience, right? Versus the typical agent spending 60% of their time, sort of looking for business, right? Prospecting. So having that edge and then proving out that we can go into new markets and achieve the same results. That was a big component. Really another big factor is you have to be very systemized and structured. So, your processes, like we had manuals and systems for everything. So, a private equity investor could go through that and say, okay, this is something that's duplicatable and repeatable. and super tight audited financials, right? So it's not something you can just go easily do. It takes a lot of focused effort, attention, and money, right? Because getting those audited financials, getting all those systems built out. We worked with an investment bank. So we went to a local investment bank in Atlanta, and, we talked to a number of them, but we selected one we felt was the best fit, and they helped us run that process. And so through that process, they do a full underwriting analysis. So before even going to market, they were coming back and saying, well, likely they're going to want to see this. So can you solve for that? Or, your profit looks great, but if you could juice it a little bit, over the next 6 months. So they helped us with the right timing to kind of go to market. So it was an involved experience. I mean, frankly, like our, chief operating officer, it was kind of like his full-time job, for that year. As we went through that process, we had multiple meetings with multiple companies. Now, if you're a startup and you're looking to raise capital, I mean, there's venture capital funds, there's things like that you could reach out to. But it goes back to, you have to have something about your business that's just a little bit different than the competitors and, makes you stand out in the marketplace. So maybe it's a specific product you have that's unique in the marketplace, or in a sales and service industry, a unique approach that gives you that. And then looking at our company, going back, without getting too into the weeds, because of our model, we captured a lot more of the commission. And so the agents were closing on volume. Our average agent would close 6 to 8 listings a month, where the average real estate agent would do 6 to 8 a year. So they were still well taken care of, but they weren't collecting 80, 90, 95% of the commission like happens at a lot of traditional brokerages. Right. And so that gave like, wow, this model makes sense. You can plug an agent in that's relatively new, put them through your training program, and get them up to speed, closing a couple of deals a month, and within 6 months, 6 to 8. And so that looks interesting to private equity, right? Because it's just unique and different in the marketplace. So that's really it. So, I, for example, have a little small investment in a startup, and it came to me through a relationship, through a friend of mine. And he said, hey, look, this company's looking to raise some capital. They have something very unique in the marketplaplace. And, I did my due diligence and research. So that was friends and family, right? So they weren't going through an investment bank, but I still got a, 90-page slide deck with all the financials and everything about their company that was unique. And so it's definitely something you have to be really focused on and prepared for. It's not something you can just send an email out to a couple people, right? You really have to have a thoughtful approach and, sell your business, right? At the end of the day. Yeah.
And so at Faris Capital Partners, give us for some, maybe the businesses that are listening, what is your investment thesis, and what sort of checks are you writing for initial investment into the companies that you're looking to invest in?
Yeah. So, one of our thoughts was initially, and we focus exclusively on apartment buildings. Now, there's multiple types of investments you can do in any sort of, asset class. But in commercial real estate, when you look at multifamily, there's really kind of 4 big ones. There's core, which is you buy like a brand new building, that's leased up, and you just manage it, right? And it's lower risk, but lower reward. Institutional groups love that kind of stuff. Pension funds, because it's throwing off 7-8% cash a year. And, you put a good property management company in there, monitor it, but it just kind of works. Core plus is where maybe it's 5 or 7 years old and you can add some amenities and things like that, but still a little less risky. On the opposite side, there's opportunistic. So that would be like redeveloping a building, right? So there's some offices being converted into multi. I don't like this. I mean, personally for us, our company, but motels and hotels are being converted into multifamily. We actually like the middle approach, which is what we call value add. So it's like an 80s, 90s, early 2000s building in an awesome area. So a class A or class B area. And it's just a little tired, it's got the Formica countertops, maybe it's got carpet throughout, black appliances. And so we go in, acquire the building. Now we raise capital from investors, which I'll get to do this. But then once we take over the building, in the first 30 days, we do a complete exterior overhaul. We paint, pressure wash, fix the parking lots, enhance the amenities. So add amenities where possible, but, putting new pull furniture, like redesigning the gyms, all that stuff. So that shows immediate impact to the residents, because they're like, okay, new owner, but I'm also getting something here. They're making the property better. And then strategically over like a 2-3 year period, we renovate 4 to 5 units a month. So we're keeping occupancy high the whole time. We're not, leasing down and then renovating and then leasing back up. It's just if somebody non-renews and we have a vacancy, then we renovate that unit. and spending, say, $14,000 to $15,000 on that unit often will allow us to command, $250 to $300 more a month in rent.
Right.
And our thesis is that, all these new buildings are being built at this much higher, cost of construction. And so one of the metrics we look at is the replacement cost for our building. And so it's that idea that our all-in basis is, maybe $100 a door less than that new development down the street. But yeah, ours might be 90s or early 2000s, but it's got granite countertops, great flooring, designer light fixtures, designer plumbing fixtures, a brand new kitchen, brand new bathrooms. And so somebody's paying, effectively $300 to $400 less for our unit than that brand new one. So if we can kind of make our units competitive with that newer stock, but at a much lower rent. And so, that strategy's worked well. I mean, most of our buildings are 95, 96% occupied. By the way, you don't really want 100% occupancy in an apartment building, because that kind of means you're not, pushing your rents enough. You're not capitalizing as much as you can. So that's the basic premise. And so for somebody who's thinking about this, or they're like, wow, that's intriguing, I didn't know you could do that. What you often see is say, for example, you're in real estate, or you like investing in real estate, and maybe have a full-time job in another industry, going out to your friends and family, right? And maybe looking for an 8-unit or a 12-unit apartment building, finding a good opportunity and run that same play just at a smaller scale. We typically do 60, 80, 100 unit plus, but part of Mark and I's, advantage is 20 plus years experience in business, right? So we have a big network of friends and family, sphere of influence, et cetera. So we've been able to lean on that to attract investors to us. So if you don't have that network, you just start small. And then over time, you'll incrementally improve, because let's just say you do a 12-unit apartment building and those investors, double their equity in, say, 5 or 7 years. Likely they'll want to reinvest on the next opportunity. And so, it's like if you doubled their money, now you've doubled the equity you could potentially invest in that next deal. So that's a great place to start, and it could even just be you and another friend, putting some capital together, doing a deal together. Now, I say that, but, you make sure you have the right partner, and
that's key.
The whole thing, everything's papered. What happens if we disagree? Who has the decision-making authority? So it's really much into, right? But that's where a lot of groups start. In fact, some of our friends that now have over $1 billion in assets started doing 5 and 7 unit deals, but just each time they kind of incrementally increased and improved. And now 10 years later, they've got $1 billion in assets under management. So, I think that's one thing that has really helped me is, always have a big 10-year goal, but then just chip away every day, right? It's not these, we talked about it before, it's just that 1% improvement every day, right? Versus trying to go, well, next week I'm going to, buy a 60-unit building and you just did a 5-unit, right? It's like, how do you just incrementally improve, but always have that North Star of that big, hairy, audacious goal, right? And then every decision boils down to that. So for us, right, Faris Capital Partners, we really simplified it into 3 things. It's like, if we want to raise $1 billion in capital, we're going to need to raise $1 billion in capital. So how do we do that? We're going to need to acquire 100 buildings and manage those buildings and implement our construction plan and all that. So how do we do that? And then the third thing is, if we're going to acquire 100 buildings, we need like 25 to 30,000 deals to come through our system to narrow it down to those 100. Because right now it's 300 to 1. We get 300 deals before we get one that we like and we buy.
Gotcha. That's great to know.
So then you just kind of can then start saying, okay, like, does this decision support one of those 3 priorities? Or is it just like superfluous and maybe just something we can skip? And so when you have that clarity of what that 10-year North Star is, and then what are the 3 pillars of that plan, then you just ask yourself, does it support that or does it not? And if it doesn't, you just don't do it, right? And raising capital is interesting. Relationships, right? So, you probably have a lot of high net worth people, you're listening to this in your network, in your world. So, having that willingness to touch base, call people, ask, right? And ask for that money. It's not easy, but it's
so like, let's walk people through, so it's like, hey, you met somebody, or maybe somebody, like, walk us through. Is it like you're sending an email and you're like, hey, I'm working on this thing, would love to talk to you about it. Like, just kind of like give folks, because I know there's a lot of people out there, especially small businesses, and they're so trepidatious about having this conversation. And part of it is they just don't even know, like, what's the vocabulary. So maybe just like walk us through, like, really quickly, somebody maybe you've met, or like you don't know really well, or somebody you know really well and you're just like, ooh, but I don't want to ruin the relationship with this person.
Yeah. I mean, so typically how we approach it is we start with, just the relationship, right? And then you let people know what you're up to. We used to say at Mark Spain Real Estate, don't be a secret agent. The joke
Right.
being a lot of people just be afraid to tell people they're an agent. It's like, be open, be forward about it. So in our world, like it could be at a soccer game with for my son and just talking with, oh, so what do you do? And then like, oh, here's what we do. And like, our goal is to help investors this and the inconsistent returns in the public markets. And, then they're like, well, that's interesting. And so would you like me to send you the deal deck? Right. But, Mark is the tip of the spear with the investors. And so it was phone calls, it's lunches, it's coffee. Now we've evolved into, he has a podcast where he interviews high net worth entrepreneurs in the Canadian market where he's from. And the goal of that is just to learn more about them. We're not asking for anything in that, but he always talks about their investment and their wealth building strategy. And we ask, well, what are some of your pain points when it comes to investing? Mm-hmm. And if they say something that we think we can solve for, then that becomes a follow-up call a few days later. Hey, I was thinking about our conversation. You mentioned this. Let me share with you a little bit about what we're up to. So it's just sales at the end of the day. Right. How many calls are you going to make? How many dollars are you going to make? Putting yourself out there on social media. And I will say we also do some outbound stuff. I mean, we're marketing on Facebook, and targeting high net worth areas and attracting investors that way. But the early deals all came from just past relationships. So just, not being afraid to tell people what you're up to and, being, willing to ask, you get a lot of no's, but
you get a lot of no's.
Yeah. Every no is one step closer to a yes. If you have that kind of mentality, you'll win in this business.
That's right. So 2 more questions. If some of our listeners are maybe they're like, hey, I'm really interested in dipping my toe into make a real estate investment at Faris Capital Partners, what's the minimum check size for them to come work with y'all?
Yeah, so our minimum is $100,000 investment. And we do that because we want to have fewer investors that we can really love on. And so those quarterly calls I mentioned, things like that. Mm-hmm. And we're typically raising, 12 to $14 million per deal. So, minimum's 100. Our average check size is actually about $180,000 though.
Okay, good. Yeah. Well, good. I just want our listeners, we're like, hey, if they're interested in this, they can look you up and do that. So last question. If somebody is really just starting out and say they want to move from their traditional stock portfolio to now really getting into real estate, what's one strategy that they can apply today to begin building wealth in a disciplined and sustainable way?
Yeah. So, just get out there, look at what's available, look at the deals and the opportunities that are there. At the end of the day, there's a lot of companies that do this, but it's finding the operators that align with your values, right? So your communication preferences, we underwrite very conservatively as an example, hence why we have 300 deals to find the one. But I would say that the way I view it is that every investor should be diversifying into real estate. So, I'm not putting 100% of my investment capital into real estate. I have a lot in the public markets, but sort of like, you have your growth, your income, your international, some bonds, stocks, right? It's like adding real estate in, I think is something critical everybody should do, particularly multifamily, because at the end of the day, it's a core human need, right? So right now we have a housing shortage and there's no solvable, I'm not seeing any solution to that problem right now. Cost of materials, everything's getting higher, especially with the tariffs. And so with that, we're betting big on it because nobody's going to wake up tomorrow and say, you know what, I don't need shelter anymore. Shelter is a core human need. So that's why we're betting big on it right now. But, you can invest in car washes, mobile home parks, RV parks, office, retail. We just like multifamily. So if my suggestion would be is start there, because that's typically where you're going to get, I think, bottom line is rents rise with inflation. They're almost exactly correlated. So in an inflationary market, housing is one of your best investments. So that would be my advice. Start with housing.
Well, thank you, John, for being on the show. This has been such an intriguing conversation. Thank you so much for being on the show. Just to my audience, you are listening to John Makarewicz, who is the managing partner for Faris Capital Partners. Thank you so much for being on the show today.
My pleasure. It was a great time. Thanks, Elaine.
Awesome. And so that's it for today's episode of the Do Different Better Show. I'm your host, Elaine Rasmussen. Be on the lookout for some more amazing guests coming up, like financial author Scott Yakamura. I'm super excited about this show as well. Make sure you subscribe, leave a review, and share this with a friend who might be building their own family dynasty, but doesn't necessarily know how to get started. Don't forget, you can watch me on my YouTube channel at Do Different Better. You can catch me on the IG at Do Better with Elaine. And don't forget to check out and listen on AM 950 every Sunday at 12 o'clock. Thank you again, John, and thank you for listening. I will see you next time.